Last Friday, the government took investors by surprise. It announced levy of export duty on petrol, diesel, and aviation turbine fuel. Besides taxing exports, the government also announced the imposition of windfall tax on gains made by domestic refineries. A cess of 23,250 rupees per ton on domestic crude production was also imposed. The move clipped wings of upstream oil companies, with shares of Reliance Industries declining over 7%. Other related stocks fell in the range of 3.5 to 15%. According to independent market analyst Ambarish Baliga, the measure will set the precedents for such taxes going ahead and is surely negative for refiners as well as explorers. A question which arises is that how will the industry get compensated when the prices are not remunerative? While he suggests investors avoid buying these stocks in the dip as the upside in profits are dented, Gaurang Shah has a contrarian view.
So I think the prime focus is that more and more domestic supply should come into the domestic market. I think it is basically to get rid of the inflationary pressure because of high energy prices. I would say Reliance, yes, because you named Reliance. ONGC is also on our buy recommendation. GAIL, in case if that is also down, then that is also in our buy recommendation. So these three exploration related companies, you can think of buying it. I'm talking about government exploration companies and government related oil marketing companies. Other than 20% dividend, I think there is no charm to look at, because those companies have not done anything. Given the fact that they spoke about the BPCL was one of the first ones on the divestment block, but again that has been put in cold storage if I'm not mistaken.
Last Friday's fall in benchmark indices brought them dangerously close to the bear zone territory. Let's go to Business Standard's Abdul Bakar to know key technical levels over the short to medium term.
The benchmark indices BSE Sensex and Nifty have tumbled close to 18% from their October highs. The current scenario indicates a pullback, and the question is whether this rally can be called a short-term rally or it should be named as a reversal. For Sensex, on the higher side the resistance comes to 54,400, and for the Nifty it comes to 16,300. Support for both the indices are placed at 50,900, and for the Nifty it is 15,180 levels. For Nifty Bank, the upper side resistance, it need to cross the level of 34,400 and it has a support of 32,200 levels. The most battered index among the major indices is Nifty IT index, which has tumbled 30% in recent times and has a resistance of 30,000 levels with a support of 27,000.
April-June quarter earnings season will begin this week, with TCS kickstarting the earnings season. The IT firm is set to report its Q1 FY23 results on Friday, July 8.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.